Hello friends, today we will discuss the relationship between gold and global crises. Gold is one of the oldest investment instruments in history and is often perceived as a safe haven by many people. So, is gold really a safe haven? How do gold prices react to global crises? Continue watching our video to find the answers to these questions. Gold has been considered a valuable metal throughout human history. There are many factors that determine the value of gold, including supply and demand balance, inflation, interest rates, exchange rates, geopolitical developments, and global crises. Global crises are a significant factor that directly or indirectly affects gold prices. Global crises create fear, uncertainty, and insecurity in financial markets. In such situations, investors tend to move towards assets they consider safer by avoiding risky assets, and gold is one of these assets. Therefore, during global crises, gold prices often tend to rise. For example, the mortgage crisis that began in the United States in 2008 turned into a global financial crisis. This crisis resulted in bank bankruptcies, the collapse of credit markets, sharp declines in stock markets, and a slowdown in global economic growth. During this period, gold prices rose from $850 at the beginning of 2008 to $1,900 at the beginning of 2011. This indicated a historical record for gold prices. Factors such as investor search for a safe haven, central banks' monetary expansion policies, the depreciation of the dollar, and an increase in gold demand were influential in this rise in gold prices. Another example is the COVID-19 pandemic that affected the world in 2020. This pandemic led to not only a global health crisis, but also a global economic crisis. The restrictions and quarantine measures implemented worldwide brought economic activities to a standstill, causing significant losses in global trade, production, consumption, and employment. During this period, gold prices rose from $1,500 at the beginning of 2020 to $2,000 in the middle of 2020, indicating a new record for gold prices. Factors such as investor search for a safe haven, central banks' monetary expansion policies, the depreciation of the dollar, an increase in gold demand, and the popularity of gold ETFs were influential in this rise in gold prices. These examples show the tendency of gold prices to rise during global crises. However, this does not mean that gold prices always rise or always yield profits. Gold prices can fluctuate depending on factors other than global crises. For instance, gold prices, which reached $1,900 in 2011, fell to $1,050 in 2015. Factors that contributed to the decline in gold prices during this period include the recovery of the US economy, the Federal Reserve's interest rate hike, the appreciation of the dollar, a decrease in gold demand, and withdrawals from gold ETFs. Similarly, gold prices, which reached $2,000 in 2020, fell to $1,700 in 2021. Factors contributing to the decline in gold prices during this period include vaccine developments, an improvement in the global economic outlook, a rise in US Treasury yields, the appreciation of the dollar, a decrease in gold demand, and withdrawals from gold ETFs. This situation demonstrates that gold prices are not only sensitive to global crises, but also to market conditions, expectations, and perceptions. Therefore, when investing in gold, it is essential to consider not only the safe haven perception, but also other factors affecting gold prices. Analyzing the relationship between the past performance, current situation, and future expectations of gold prices, monitoring the level, trend, and volatility of gold prices, understanding the correlation of gold prices with macroeconomic factors such as exchange rates, interest rates, inflation, geopolitical developments, and global crises. Knowing the dynamics of gold, supply and demand, and determining the appropriate timing and strategy for gold investment are crucial. Friends, Today we talked about the relationship between gold and global crises. Although gold is seen as a safe haven during global crises, gold prices can change based on various factors, not just crises. Therefore, when investing in gold, it is necessary to consider all factors affecting gold prices and closely monitor the gold market. I hope our video has been helpful for you. If you liked our video, please press the like button, subscribe to our channel, and turn on notifications. See you in the next video. Goodbye.